course, we know about the SEC under current chair Gary Gensler and his attacks on the crypto space, which are basically a function of his boss, who is Elizabeth Warren. For the past 4 years, Elizabeth Warren has basically waged a one-woman war against the cryptocurrency space. This has to stop. These government agencies work for us, the people of the United States, not the other way around. All right, welcome to episode 1 of the all-new Money Talks. I've really missed you guys. It's certainly been a minute. Why are we relaunching Money Talks now? Well, over the last few weeks, I've had the opportunity to speak to literally dozens of current and former Abra clients. Everyone basically said the same thing. I loved watching your Friday videos. I don't know if you're all trying to butter me up, but that's been the feedback. When are you going to bring back Money Talks? Well, here we are. So with this all new Money Talks, we're going to give you a few things. One, we're going to give you our take on geopolitical events. Obviously, the big news of the day right now is the current presidential cycle. And of course, we'll talk about how these geopolitical events, the presidential cycle, might affect your investment decisions. We'll give you our take on the macroeconomic trends that we're seeing in the world, especially what's going on in the markets. And lastly, our take on how technology like crypto, AI, and other technologies are shaping our world and what we think you should be paying attention to. Obviously, we have a heavy bent towards crypto here, but crypto is now making its way into a lot of different technologies, and we'll talk about the intersection of all of those things and how it affects our world, how it may impact your own research as you're making your own investment decisions. Let's have some fun. Maybe we'll even get to interview and discuss timely topics with some old and even new friends along the way. And over the past few months, I've had the fortunate opportunity to do some podcasts with some good friends, including the Pomp podcast, say that 6 times fast, Scott Melker's Wolf of All Streets. I did Kitco, which was a lot of fun back in Austin, I believe it was, CNBC recently, and a bunch of others. You can find them all online. My team and I will continue to go out and spread the word as best as we can, but Money Talks is just for you, the Abra family. So on that note, let's get right to it. And as a reminder, this is not investment advice. You can check out our standard disclaimers on the abra.com website. Money Talks doesn't take external sponsors. The show is produced by the team at Abra, and we don't endorse third-party products or services here on Money Talks. Just because I say I use a product doesn't mean that it's an official endorsement, but I may tell you from time to time what I'm personally interested in. All right, gang, so what do you think we should talk about? Why don't we start with a recap of the last few insane weeks? So far, according to my mental notes, let's see, we've had a presidential debate that was an unmitigated disaster for President Biden. We had a presidential candidate shot in the face and lived. The incumbent president dropped out of the presidential race. Both opposition presidential candidates and the VP candidate and Vivek and a senator have all agreed to speak at the Bitcoin conference in Nashville happening right now. I'll give you my take on the presidential race and my personal bias. And again, it's my bias. I'm not speaking on behalf of Abra here. First, you should definitely watch the recent A16Z or Andreessen Horowitz podcast episode from this past week. Mark Andreessen and Ben Horowitz totally nailed it in explaining why big tech and little tech is supporting President Trump. This may seem like a big, bizarre 180-degree turnaround for those of you who know Silicon Valley and California, but basically my logic mirrors their logic almost to the letter. For me, there's 3 big issues, and I'll walk you through each of them one at a time, and I won't spend a huge amount of time on this because this is being talked about ad nauseum online. But I think it's important to understand why I'm making such a big shift in being very open about this. Historically, I have not been open about politics and my feelings about things, although if you're paying attention to crypto, the trials and tribulations of running Abra, other companies in the space that have been dealing with the deep regulatory state you'll have some sense of where I'm coming from on this. So my three big issues are, first, what I call Warren versus crypto. Unless you're living under a rock and you're working or involved in the crypto space, you know that for the past 4 years, Elizabeth Warren has basically waged a one-woman war against the cryptocurrency space. And by space, I basically mean the corporate versions of the cryptocurrency markets. She has placed strategically, as the person who runs the banking system in the United States, people in different parts of both the executive branch of government and other parts of government. Of course, we know about the SEC under current chair Gary Gensler and his attacks on the crypto space, which are basically a function of his boss, who is Elizabeth Warren, who runs banking in the United States. We have never experienced the level of attacks that are happening in the crypto space, in big tech, in the United States, in my lifetime. Never. On their podcast this past week, Mark Andreessen and Ben Horowitz mentioned in their entire venture career, and remember, I started with Mark and Ben in the 90s back at Netscape. None of us have seen private companies, meaning not publicly traded companies, attacked by regulators where lawsuits and Wells notices were being filed at all. Not one. And in the last several years, we've seen probably more than 20 lawsuits, Wells notices being filed. We've never seen anything like this. This has to stop. These government agencies work for us, the people of the United States, not the other way around. This senseless, needless, unlawful attack, which is effectively legislating by enforcement, must stop. And if the regulatory state won't stop it, we will elect politicians that will. The regulatory state has been losing court case after court case after court case. Okay? Clearly, they're not doing this based upon some belief that they're in the right or that they're going to win all of these cases, because they've been losing. If it was up to the incumbents, we still wouldn't have a Bitcoin ETF, which now that we have it seems crazy. Okay, that's issue one, Warren versus crypto. Issue number two is what's happening with artificial intelligence and technology in general. For some reason, now let me start up by saying, when I started out in Silicon Valley, it was the Democratic Party that really embraced technology. In California, because California is such a left-leaning state, and California generates so much of its tax receipts from capital gains generated via stock options in Silicon Valley, which is why it's the richest state in the country, the left embraced technology because it knew where its bread was being buttered. It's that simple, right? President Obama, President Clinton. Now, we had our issues with President Clinton when it came to encryption rules, and we worked it out, thank God, because we would be in even more of a dystopian shape if that hadn't happened. But since the days of Clinton and even to a degree Obama, who was a curious president, not my president per se, not my first choice, I should say. They're all our president once they're elected, and we want them all to be successful in the right way. But since Obama, the left has basically done a 180 on technology, right? They realized that they couldn't effectively manage Twitter going forward the way they did during COVID, when Twitter effectively became a recording and manipulation function of the effectively left wing of the Democratic Party. I hate to say it, but that's what's happened. Now think about what's happening in AI. AI and crypto are the two fastest growing technologies we've ever had on planet Earth, faster than mobile, faster than the early internet itself. And if we get AI wrong, we're going to end up in a model where effectively we have an OPEC, right? OPEC is effectively a price manipulation system, right? It's basically an organized monopolistic cartel for oil. If we let Apple, Google, Facebook own AI, right, effectively innovation and competition is going to be stifled because startups will not be able to compete. And if you look at what's happening with regulation right now, as it relates to AI, they are trying to regulate startups out of existence in the AI space. There is no reason for this. None. Zero. It makes no sense. It helps no one except for these trillion-dollar companies. I'm all for Apple, Google, Facebook competing to their blue in the face. It's good for us. But we need the startup ecosystem competing with those incumbents in order to innovate. We need the Federal Trade Commission to get out of the way for companies buying startups. The motivation for kids to start companies is going to wane if they think that there's no chance for their company to get acquired. Try getting an acquisition done of any size in the United States right now. Try as a private company getting a federal license for anything. I don't care what the industry is in the United States right now. It is insane what's going on. You can't get a company bought and sold. The OCC, in theory, has a charter for banks to basically offer digital crypto services. There's been one such charter issued before President Biden took office, and none have been issued since. Not one. Although I can tell you there's at least a dozen companies that would love to go after that charter and be regulated by the OCC, which is the federal banking regulator in the United States. But you can't get it done. It makes no sense. This administration is stifling technology innovation, and it must stop. My third point, and I apologize for being so animated about this, but I strongly believe in this, is this issue of the regulatory state. Now, I used to roll my eyes, and you can see me doing it a little bit here, when I used to hear about the deep state. I am not inherently a believer in conspiracy theories, although I'm starting to change, okay? When you get your ass kicked enough times by the deep regulatory state of people who aren't elected, right? They effectively now answer to no one. At some point, enough is enough. So it's not just crypto. Food and Drug Administration, the FAA, Federal Trade Commission. Doors aren't flying off of airplanes because we don't have enough regulation. We built jets in the 1950s, 1960s. Doors and wings pieces weren't flying off of airplanes then to the degree they are now. We have too much regulation. We've become dependent upon the nanny state, and we've become less dependent upon our ability to innovate and compete. Look at what happened when SpaceX forced its way, and it effectively forced its way into what was effectively a cabal of monopolies servicing the US government with rockets. It went light years, it pulled ahead of the incumbents so fast it was mind-blowing. Look at Starlink. Look at its ability to land used rockets. If we had left it to the government to figure out how to build reusable rockets that landed themselves on little tiny pods in the ocean, it would take 100 years to have those rockets. Okay? The government needs to start working for the people again and not the other way around, and I will vote as such until all of you get it. Okay? I am giving advice when it comes to what government should do. Government should work for you and for me, not the other way around. Right now, I feel like I work for regulatory agencies. That is insane. Okay, this has to stop. And I will use my last breath as CEO of a private technology startup to facilitate change as fast as I can in this regard. Now, I would be very happy to embrace a Democratic president executive administration that goes back to where it was in the 1990s. Reasonable, limited oversight and government that was a government for the innovators. And I pray that we get back there. Okay, enough of politics, and I apologize for getting so animated, but as you can tell, I feel really strongly about this. Let's talk about the markets. I know a lot of you are wondering, and in some of the calls I've had with clients the past week, hey, Bill, where's it all going? What's your opinion? When are we going to see interest rates? When is crypto going to start its methodical march higher, et cetera, et cetera? So for me right now, there's one chart that I look at every day that matters more than all the others to me right now, and that is the DXY. The DXY is the dollar chart. It's basically the relative strength, if you will, of the dollar versus other currencies. Keep in mind, I'm not a macroeconomist by background, I try to use layman's terms when I explain things. So if you are a macroeconomist, please don't start sending me hate messages because I'm not using your terminology to explain things, okay? But basically, the stronger the dollar is, the less dollars there are likely to be floating around that would suck up risk on assets like equities and, of course, crypto. And we'll put up a DXY chart here, Jacob, that basically shows everyone that effectively the dollar has been on a downward slope starting in late 22 all the way through to effectively, mid last year. And then it did a spike up to October of last year. And then it did a retrace all the way down through January, actually the first week of January this year. And, it's more or less been sideways since then. So let's analyze that in the context of Bitcoin for a second, all right? The Bitcoin price was up significantly last year at the same time the dollar was falling, right? And the reason is that the DXY, or the relative strength of the dollar, this DXY chart, is giving you forward-looking expectations as to how much dollars are going to be sloshing around the system. And if the Fed lowers rates, there's more dollars sloshing around the system. We'll come to rates in a moment. So as the dollar's relative strength on a forward-looking basis is falling, people are expecting more liquidity in the system. They're starting to price up risk on assets like Bitcoin. And so as a result, Bitcoin had a very strong 2023. However, early this year, starting basically the first week of January, the relative strength of the dollar started to increase back to where it was late last year. As a matter of fact, it peaked again in April of this year. However, the price of Bitcoin was going up. You might say, well, Bill, you just said that if the dollar is going up in value, there's less less dollars sloshing around the system, and risk on assets should be falling in price because the demand for them will decrease because there's not enough dollars to buy them. So why was Bitcoin going up in price? It's very simple, right? Earlier this year in Q1, the Bitcoin ETFs were released, okay? And of course, the demand for those was huge because 401ks, IRAs now had a way to easily add Bitcoin to those portfolios. There was no institutional demand in the first quarter for those ETFs. Institutions have a process they go through before they can add new equities to their portfolios or recommend them to clients, and they hadn't gotten there yet. That was a retail-driven, one-time set of demand for those Bitcoin ETFs, and the price responded accordingly. Okay. However, because the DXY, or the dollar relative strength, has more or less been sideways since April, right, you'll notice that the Bitcoin price, and Jacob, we can put up the Bitcoin chart really quick, has more or less been sideways in that 65K to 67K range since March, April, all the way until now, which also happens to coincide with the DXY, more or less, the dollar price more or less being sideways during the same time frame. However, in early July, the DXY started to fall again, right? It fell from 106 to about 104. Now, in dollar terms, that's actually a fairly big drop. It may not seem like a big drop if you're looking at crypto prices, but a couple of percentage points drop in the relative value of the dollar is actually a big deal. And as a result, crypto has had a good rally back from its lows sub 60K in July up through late last week, when I think Bitcoin peaked again right at around 68K. And as the dollar started to lose a little bit of strength, Bitcoin pulled back quickly this week to 63,000. But it's since recovered and is right at 67,000 at the time that we're recording this on Thursday evening. So again, you get a feel that why the dollar maybe is so important to me, and that leads to this idea of interest rate cuts, right? So one thing to keep in mind is that to me, DXY is basically a forward-looking measurement of where interest rates are going. As interest rates fall, as I said, there are more dollars floating around, and that drives down the relative value of the dollar. Even if other countries lower rates at the same time, it generally won't offset the US rates falling, since the US economy and the float of US dollars is so much bigger, right, than other countries' economies. Now, traders are currently predicting 3 interest rates cuts for this year, totaling about 1%. If you look at the CME's dot plots, which you can go to their website and they'll show you what traders are currently predicting, they show you 3 interest rates cuts starting in September, going into through December. All right, and that would lower interest rates by effectively 1% if that all happens. There's a meeting, I think either tomorrow or next week. I don't remember when it's supposed to happen exactly, but certainly in July. And my guess is they won't cut rates then, but they will signal that they plan to start very, very soon, which would imply doing it at the next meeting. Okay, we'll see. But that's certainly, I think, in line with my own prediction as to where this is all going. And it seems to make sense given what's going on with the broader economy right now. Okay? All right. So the challenge that we have right now is that while this should have, on the surface, a big impact on risk on assets, especially crypto, which tends to get, an outsized percentage-based portion movement in price when you get this increased dollar liquidity. The challenge we have right now is that the U.S. housing market is basically imploding in most territories in the United States. Silicon Valley has been relatively unscathed because the AI markets are booming, which is why NVIDIA and Apple and Google, Facebook, et cetera, Meta, have all experienced, big stock gains over the past year or so. Okay, which always translates into, positive home price movements in Silicon Valley, San Francisco, and beyond, and the immediate Northern California area. But even with the 3 rate cuts, the average homeowner will probably not be able to reset their mortgage rate or buy a new home or even be incentivized to sell their existing home, because the mortgage rates that everybody got during COVID were so low. And even if you weren't buying a house, you probably reset your mortgage during COVID to a rate that was so low that even a 1% drop in rates isn't going to help alleviate the imploding housing market. The Fed knows this, and they know that this is a huge problem and it's going to need to solve soon. Otherwise, credit card and personal debt is going to skyrocket out of control because people won't be able to tap their home like an ATM machine like people did in the 90s and early 2000s. We'll see what happens, but I predict that rates are coming. Of course, we have to talk about the current state of the debt and the repricing of the debt. We'll come to that probably next week. All right, we got a bunch of other things I want to get to before we call it a day here. So the big Bitcoin conference is happening right now in Nashville. Here you can see on the slide, it's a picture of all the huge keynotes. We've got Trump, which is astounding. A former president is speaking at a Bitcoin conference. Wow. Kennedy, right? Also an independent presidential candidate. Vivek Ramaswamy, Senator Lummis, all speaking at the Bitcoin conference. Of course, the torchbearers, Michael Saylor, Kathy Wood, all speaking at the conference as well. I expect that we're going to see potentially a huge announcement either from President Trump or Senator Lummis or both together. We'll see. I'm not sure. The rumor is that Senator Lummis is going to introduce legislation that would call for the United States to begin holding Bitcoin as a reserve asset similar to gold, and potentially increase the value of Bitcoin that we're holding, or the amount of Bitcoin we're holding over time, to get to parity with gold. I don't know if that's true. I'm fairly certain that, based on what I'm hearing, that we are going to see this legislation proposed while we have a divided Congress. I don't see it getting there, but who knows, given that the Democrats have clearly learned a lesson with this recent attempt to ban Bitcoin within the banking system, that they need to start embracing crypto. And I think that within the Democratic Party, there's a pretty big pushback against Senator Warren and her lackeys that are basically anti-crypto for no good reason other than an attempt to socialize the banking system and to control everybody's lives as a result. Okay, don't want to go back to the politics discussion, but you can see why Democrats now are starting to get the picture. They completely underestimated the power that you as crypto holders have in this country, that $1 trillion asset class would have. And to think, when I started in this space, I did a TED Talk in 2012, that now in 2024, that we're actually having presidential discussions about Bitcoin becoming a true reserve asset for crypto, for the country's balance sheet in the United States, right? It is mind-blowing that first of all, we've gotten to this point, right, that the dollar itself has been destroyed by horrible, horrible economic and monetary policy in this country. The dollar has lost 99% of its purchasing power in the last 50 years. That should never have happened, but it did. It is what it is, right? Bitcoin represents an opportunity to augment the value of a depreciating asset, the US dollar, with an appreciating asset that is deflationary over time, right? It is a better gold than gold itself. All right, so I am super excited to see what they announce. I can't wait to talk to you about it next week. We'll see where that goes. This week, of course, the Ethereum spot ETFs launched after approval by the US SEC. And it looks like we'll see Solana ETFs in the coming months. I think the peak trading volume was about $1 billion on the first day, which was awesome. The Bitcoin ETFs, as expected, at least by me, were the most successful ETFs in US history, surpassing both gold and oil. So that's been awesome to see. And look, for the entire community, for those of you who are involved in launching those ETFs, well done. Again, I'm not a huge fan of individuals, especially high net worth people who are looking to hold crypto, buying ETFs. If you want to add them to your 401k or IRA, that's fine. But for individual crypto holdings, even Bitcoin or Ethereum, I actually recommend something more akin to a separately managed account where you retain title to the crypto, you can earn yield, borrow against it, et cetera, et cetera. Whether you do it through us or other companies is not my point. But I think that you should own the crypto itself, just like I think if you do buy gold, you should own the gold itself. But for an IRA, 401k, holding an ETF makes sense. Okay? All right. Lastly, Marathon Digital. Big fans of Marathon. They bought 20,000 Bitcoin for their treasury. That is huge. Hopefully you saw Abra's announcement recently, I think it was last week, that we now have an Abra treasury product through our registered investment advisor that allows companies, nonprofits to actually hold crypto, Bitcoin, Ethereum, Solana on the company's balance sheets using this separately managed account model. I predict you're going to see the corporate world really adopt crypto. It makes perfect sense. Think about it. Generally, public markets discount the value of your treasury because treasury is held in cash or bonds or cash equivalents, which are effectively depreciating assets. They can't keep pace with inflation or dollar printing, and as a result, the value of those treasuries are discounted to close to zero over time. However, if you convert your treasury to a appreciating asset, such as Bitcoin, now, of course, you see what happens to the stock prices, such as MicroStrategy and other companies that have adopted a Bitcoin standard for their treasury or part of their treasury. Their stock prices have increased because the street no longer discounts the value of their treasury to zero. It's that simple. All right. Anyway, so that's it for the first episode. By the way, the Olympics start today. If you're watching this on Friday, it's awesome. I'm a huge Olympics guy, especially winter. But for summer, I am really excited about men's basketball. By the way, I don't know about you guys, but I think it's going to be awesome this year. I don't think it's going to be a cakewalk at all for the U.S. basketball team. I think the U.S. plays Sunday morning Pacific time here. I'm in California this weekend, and Sunday morning they're going to play Serbia, and I think it's going to be super close, much closer than people think. Serbia's got Jokic and Bogdanovic, who could easily have a better game than the aging Curry and LeBron, who I'm obviously huge fans of. Anyway, I'm super excited. So, can't wait to see the Olympics. We'll talk about it next time. Anyway, we'll stop there. That's it for episode 1 of the All New Money Talks. We'll see you all next week. Bye-bye.